Welcome to Kitco News. I'm Niels Christensen. Joining us today to talk about the inflationary and deflationary environments faced by the global economy is Ronnie Stöferle, managing partner at Incrementum AG and author of the famous In Gold We Trust report. Thank you very much for joining us today.
Hi, Niels. Hi.
Your report actually comes out in 1 month, so thank you very much for taking time out of your busy schedule to talk with us. I really appreciate it. And let's just jump in. Last week, the IMF, the International Monetary Fund, warned that there's going to be a depressionary environment for the global economy. But you're actually saying that we should be worried about the inflationary environment that's to come. What are your thoughts?
Well, I mean, we have to say it's not one shock that we're facing at the moment. It's actually a big number of shocks. It's a demand shock, it's a supply shock, it's a deflationary shock that we're facing at the moment now. It's a wealth shock, so 15 trillion US dollars were basically wiped out. It's a dollar shock. Have a look at the US dollar against other currencies, extremely strong and on the verge of breaking out. It's an oil shock, of course, and soon it will be a corporate credit shock. So it feels like a bit like a thunderstorm, an earthquake, an avalanche, and a tsunami hitting at the same time. So from my point of view, the steps that the politicians and central bankers have taken in the last couple of weeks, perhaps they really achieved to avoid a Great Depression and that will just go into a global recession. I'm not sure about that, but from my point of view, it's really obvious that inflation is really around the corner because let's face it, we're seeing the most aggressive central bank policy that we have ever seen. But we're not only seeing unprecedented monetary stimulus, but we're also seeing unprecedented fiscal stimulus. And I think this combination, once the economies open up again and velocity or the demand to hold money change, then I think we should be in some sort of a inflationary, perhaps even stagflationary environment. So from my point of view, nobody is really prepared for higher inflation at the moment. There are 15 trillion invested in negative yielding debt. So rising inflation is obviously the pain trade for those bonds. And the question is, where will all this money go to? Will it go into the equity markets? Perhaps. Will it go to real estate? Perhaps. But from my point of view, gold will be one of the biggest beneficiaries of a new inflation paradigm.
Mm-hmm. So what do you think? What can we expect in the gold price? I mean, we're seeing prices holding 1,700. Everybody's sort of calling for at least new all-time highs. Bank of America said, $3,000 in the next 18 months. What do you think? I mean, is all-time highs just around the corner? I mean, if we look at price action from 2008, the last financial crisis, this seems to overwhelm that. So do we see, is it just higher prices, common sense?
It is, but we shouldn't forget that nobody is really invested. So this party is just getting started. Niels, we shouldn't forget that gold was already trading at all-time highs in many currencies before the whole corona crisis. Mm-hmm. So actually, gold is trading at or very close to all-time highs in basically every currency now, but the Swiss franc and the US dollar. So gold perfectly did what it's supposed to do in such a crisis. It was a very, it basically played its job as a defender. I once said, gold is the Franz Beckenbauer of your portfolio. So offense wins games, but defense wins championships. And if you had an allocation in gold over the last couple of weeks, it perfectly stabilized your portfolio. Now, the big question, of course, is, I mean, gold is up 14% in dollar terms. It's up 24% in Canadian dollar terms. It's 18% up in euro terms. Perhaps it's has risen a bit too much within a short time frame. But then, on the other hand, we have to ask ourselves, what will the purchasing power of the euro, of the US dollar, of the Canadian dollar be in 1, 3, 5, 10 years? With all, the government intervention, with all those monetary experiments that we're all part of, I just don't think that fiat currencies will really rise significantly in purchasing power over a longer time frame. And that's basically it. We should compare it to other currencies, and then I think the case for gold is really clear. And therefore, I think it's only a question of when we hit new all-time highs in US dollar terms as well. And then I think we'll go to the next stage of this bull market. We'll go into this public participation phase when more people will join this party. And actually, we shouldn't forget central banks do hold 19% of their reserves in gold. At the moment, when it comes to institutional investors or investment, big players in the institutional side, at the moment, the allocation in gold is 0.5%. So it's ridiculous. If we go to the numbers of 2011, it was up 1.1%. So we can easily go there. But from my point of view, it's obvious that all roads lead to gold. And this paradigm shift that we've seen over the last couple of weeks is something that gold has already showed us over the last couple of quarters. Because as I've said, gold hit at new all-time highs in so many currencies already before the whole corona crisis.
Basically, what you're saying is there's still time to get into the gold. I mean, we don't have to worry about chasing the markets. There's still we're still in the early stages of this bull run.
Well, I mean, of course, I think we have left this first phase, this accumulation phase. Probably last year when gold went above those massive resistance zones at 1350, 1380. Now we're at the beginning of this public participation phase. And we should not forget that all this unprecedented monetary and fiscal stimulus, as I've said, it will lead to rising inflation sooner or later. Then we should not forget that at the moment, with all the measures that were taken, if you compare it to the size of the gold market, actually it's frightening. Just in May, we will already have probably the Fed will already have purchased what took us 6 years to do in the great financial crisis. So I think this relative scarcity of gold that we're having. So the amount of gold grows by 1.6% every year. This will be the real driver. Relative scarcity compared to extremely expensive, extremely aggressive monetary measures.
Let's shift gears. I mean, obviously you're optimistic on gold prices. You're bullish on gold. What about the miners? I mean, gold isn't the physical metal isn't the only way to play this. I mean, what do you see for gold miners? Is that a good way to have exposure to the upside?
Well, I think you have to differentiate what you actually want. What's your motivation? If you want a hedge against worst case scenarios, against high inflation, against financial repression, against the monetary reform, then you should have physical gold, of course. Then you should be concerned about counterparty risk, where to store it, in which location, which country. But if you say, okay, gold is probably going to rise and I want to profit from it. So if you want to make performance, that's a different motivation, I think. And then you can, of course, consider mining stocks. You can consider futures, options, whatever. If we have a look at the charts of the large caps in the mining space, for example, Newmont or Barrick Gold, but also the large royalty companies, I think if you have a look at the volumes, it's staggering. There's so much money going into these stocks, and this is telling me that generalists are coming into the market again. So it is obvious that most of the mining companies really did their homework over the last couple of years in the course of the bear market. They are producing enormous amounts of free cash flow. They have increased their dividend yields, and I think that people tend to underestimate that oil is one of the biggest drivers on the cost side. So we will see a massive increase in earnings in the mining space, and I think it's going to be one of the few sectors where we'll really have positive visibility over the next couple of quarters. Because what's the car sales going to be? What is going to be the sales numbers for, I don't know, consumer cyclicals in general? But for the mining space, I think they will come back into the spotlight again, and this is what the volumes in the market are telling me at the moment.
Finally, I wanted to ask you about Incrementum's gold beer ratio, a true measure of inflation that measures the price of beer to an ounce of gold. We heard this week that Germany is canceling Oktoberfest. How is this going to impact your ratio and your research this year?
It's not a big impact on our research in general, but I think people love those charts because it seems that in the gold community there's a high affinity for beer, so it's one of our most famous charts. We wanted to show this number, first of all, because there's a very long time series, and then on the other hand, it shows you really perfectly how inflation in fiat currencies destroys your purchasing power, and how gold over long time spans preserves your purchasing power. So what we're measuring is your purchasing power of 1 ounce of gold at the Munich Oktoberfest. And for this year, it would be probably 130 mass beer, so 1 liter is quite a lot. And this is slightly above the long-term average, which is 90 mass. But it's also way below the all-time high at 227, which was achieved in 1980. Now, it is a fun chart, of course, but it shows you that the inflation at the Oktoberfest is roughly 4.5%, which is probably closer to the real inflation rate that everybody is experiencing. So gold does preserve your purchasing power in many parts of our areas, but especially in terms of beer at the Oktoberfest.
Just before we go, what's the date that you're publishing your In Gold We Trust report this year?
Yes, 27th of May. It's going to be quite a brick again. Last year, we wrote more than 300 pages. This year, I think it will be close to 300 again because there's just so much going on. 27th of May is the big date. You can download the report for free in German, in English, and in Mandarin. Have a look at our webpage, and yeah, I hope you'll enjoy it.
Excellent. Well, thank you very much. And yes, stay safe as well, you and your family.
Thank you. Take care, Niels. Thanks.
Thank you very much for watching Kitco News. For all the information in the precious metals markets, go to kitco.com. Thank you very much. Stay safe and stay healthy.